Hi, we are looking at the EURJPY chart, and today it's Sunday, 15th of December 2013, and it is just before the markets open. We're looking at the H4 time frame of the pair. I'm using Ichimoku Kinko Hio, Bollinger Bands, fractals, the small arrows you see here, and stochastics. Let's look at the big picture of the pair first. We go to the monthly time frame. We see that the pair has just made a bullish Kumo breakout on the monthly time frame, validated by Chiku span, which has just gone above the Kumo. It was above past price action, and now it's also above the Kumo, so the bullish Kumo breakout on monthly time frame is valid. On the weekly chart, we see the leading edge of the Kumo is sharp, pointing upwards. We see that the distance between the upper border, Seku span A, and the lower border, Seku span B, is big, and that means that bullish momentum is high. And Chiku span goes straight up here, and Bollinger Bands are opened, turned outwards in the form of a funnel, which means that we expect a strong upward move on the Bollinger Band where price is, and price is on the upper Bollinger Band. We also see that the stochastics, let's go back to the monthly. On the monthly time frame, the stochastics, although they are on overbought zone, they go straight up. That means very strong bullish biases. On H1 time on weekly time frame, they are in overbought zone, but although they are slightly curved downwards, the slow stochastic goes straight up. So this slight curve may become horizontal. So for a while we expect an upward move before the correction starts, because it will happen. On the daily time frame, we see that the minor correction that the pair wanted to make has been already made, as the stochastics show. We don't know from the daily time frame if it has finished yet. We can't tell yet. We see the bearish candlestick of the last trading day here, but on the daily time frame, but we see that all biases are bullish. Leading Kumo is strongly bullish, sloping upwards. Median Bollinger Band is sloping upwards. The edge of the leading Kumo is sharp, pointing upwards. The momentum, the bullish momentum, is increasing, as we see from the distance between the upper and the lower border of the Kumo. We see that price is moving steadily for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 25, 26 days, for 26 trading days, for a month and something. The pair is moving above the median Bollinger Band. This is a strongly bullish move and mood, and we don't see a major correction for now, at least for now, okay, on the daily time frame. And let's go to the H4. On the H4, we saw that we had a corrective plunge. Pair crossed below the Tenkan Sen. You see the red line of Ichimoku Kinko Hio. The price made a bearish candlestick which crossed and closed below Tenkan Sen, but it was followed by bullish candlesticks, and the pair made this plunge formed a swing low below the median Bollinger Band. A swing low below the median Bollinger Band, when the price goes below median Bollinger Band and makes a curve and reverses and goes upwards, is a bullish continuation pattern. So practically the pair is validated since the median Bollinger Band is made from the 20 simple moving average, 20 period simple moving average. From the statistical point of view, the price is validating its mood to go upwards. It takes the permission of the median Bollinger Band to continue going upwards. It can't go away from the median Bollinger Band for long without returning to it, touching it, going around it, making a loop, and then continuing. Okay, so in this particular case, we had this validation of the pair's continuation upwards. We see the fractal, the down fractal formed here, which confirms that. We see that stochastics fell all the way down and they touched the 20 level line, and now they're slightly curved. They may go a bit lower below the 20 level line, and before they return they curve upwards, but they may even curve upwards from this level where they are now. It depends on the picture we are going to see on the smaller time frames, or it depends on which will be the move of the pair at the opening time and for the first hours of the new trading week. Let's go to the H1 time frame. Oh, and before we go to the H1 time frame, since this is the time frame where we'll be entering from, I suggest you enter long, you buy at 141.83 price level or lower. You may want to wait for the opening for a couple of hours after the opening of the markets. There may be a gap at the opening of the markets, possibly a bullish gap, but you may want to wait for a couple of hours to make sure that the correction is over and price keeps going up again. So if you enter around this level, 141.83, put your stop loss 150 pips away from your entry, to be immune to deadly spikes, to lethal spikes, headaches. You don't worry about the fluctuation of the price, so you just put your stop loss at a safe level. The safe level is at 140.35 for now. If you want, you can trail your stop using the PSAR, the parabolic support and resistance indicator dots, but that should happen after you are in profits. Now, since we are going to monitor the trade and we are entering the trade using the H4 time frame, a reasonable take profit target should be the upper Bollinger Band, when the price reaches the upper Bollinger Band. That will be a price level of 142.57. So we expect to earn 75 to 80 pips, 70 to 80 pips of profits. That's great. That's an excellent profit potential for one trading day, because most possibly the pair will reach that level after 2, maximum 3 candlesticks on the H4 time frame. Of course, it may want to continue upwards. We don't know yet what will happen. As it will be approaching the upper Bollinger Band, we will see its true intentions. Yes, the dynamics are for a very big upward move. We saw that already on the higher time frames. But for now, let's be conservative. Let's switch to M15 time frame as when the price approaches the upper Bollinger Band on H4 time frame. We can switch to M15 time frame and watch for a move like this, for a bearish candlestick to cross and close below Tenkan-sen on the M15 time frame, 15 minutes time frame, confirmed by stochastics, which will do what we see here, which will cross from the overbought zone. They will cross downwards below the 80 level line. If you see this picture on the M15 time frame, you exit, you save your profits, and you wait for the correction to finish in order to enter again long when the conditions of your exit are reversed. Okay, so let's go now to the smaller time frames to see how the move evolves. So we saw that on the H1 time frame, we see that stochastics are going to turn upwards and show a bullish reversal, which has already reached a point of good progress on the H1 time frame. But we would like to see the stochastics going even higher inside the overbought zone, at least till the price reaches the median Bollinger Band on the H1 time frame. So we would like to see that happening, and we don't want to see again a downward move when the price reaches the median Bollinger Band on the H1 time frame. Okay, we want to see it continue going upwards. Of course, there will be fluctuations, but stochastics can help us understand market's intentions, especially if we go and zoom down to smaller time frames. M30 shows that although the price made a progress and it went upwards, the last candlestick on the M30 chart showed that, as the stochastic show here, showed a minor corrective mood. On M15, we see that the corrective move actually was part of the price's accumulation of energy. We see that the Bollinger Bands here on the M15 time frame are in a contraction phase. That means that price is moving sideways, or there is a consolidation, and consolidation is like a spring. It contains tremendous amounts of energy, and when the spring is released, then it pops out very strongly. So we expect an expansion of the Bollinger Bands, and everything looks bullish. Even the stochastics are turned upwards here. The leading Kumo, as you see here in the Chimoku, is a flat top, round belly down Kumo, which is a bullish reversal formation. So we expect a strong upward move on M15, which is already confirmed by the M5 time frame. You see how sharp the edge of the leading Kumo is. You can actually cut your finger on it. I want you to keep that picture in your mind, on the back side of your mind, because it is indicative of strong breakouts. We see Chiku span going straight up above past price action and above the Kumo. This is a very strong M5 time frame bullish Kumo breakout. And I have told you that after corrections, after corrective moves, I have noticed, this is my personal observation, I don't know if it can be confirmed, if it can be put in a sort of a rule, in a sort of a formula, but I have noticed that the 5 minutes time frame Kumo breakout is the decisive, the critical point, the tipping point, which confirms that a reversal has started, that the correction is finished, and the pair is resuming its prior trend. So if the prior trend was an uptrend and the correction was a plunge, when we see a bullish Kumo breakout on M5 time frame, which is very strong and validated by Chiku span, as we see here, Chiku span is the green line, we know that 99% the correction is over and the pair is continuing going up. If we had the prior downtrend and the downtrend was made, and after the downtrend the pair made the corrective upward move, when we see a 5-minute bearish Kumo breakout, when we see bearish Kumo breakout on the 5 minutes time frame, and we see the opposite of what we see here, the pair going down, the leading Kumo going down, being sharp, and the Chiku span going down below the Kumo and below past price action, we know that 99% the upward correction is over and the pair is resuming its downtrend. Okay, whatever happens here now, in this case, you can reverse it and apply it. The same rules apply for a downtrend, wherein a downtrend is the main trend. And let's go and have a look also to the M1 time frame, which is okay. It's a very small time frame in order to give us reliable data, but everything looks clearly bullish here. Okay, so enter long, place your stop loss away from your entry, expect something to happen on the upper Bollinger Band. When price approaches upper Bollinger Band on H4 time frame, you will decide if you stay in and continue or if you exit and wait. Okay, we can't know for sure because price is price. It goes up, it goes down. Yes, we know it wants to go up, but nobody can say that there won't be a minor correction as soon as it approaches the upper Bollinger Band, okay, on the H4 time frame. So just be aware of that and watch your indicators, which are very precious tools, and make your decisions with the criteria I already presented to you. Thanks for watching and happy pips.